Super investor Mohnish Pabrai has started a new fund called the Wagons Fund. Ticker is WAGNX. We're going to take a look at it right now. We love Mohnish. He's a friend of the channel. We did a great interview with him back in December of 2021, and we absolutely love them. So let's go check out the components of this fund. Now, guys, right here is the actual presentation from their website. Here is a list of the companies that he has, the countries they're located in. When we met with him, he was talking very positively about Turkey. He was looking at Turkey. So Coca-Cola, I don't know how to pronounce this, is in Turkey. I wonder if they're a distributor or bottler out in Turkey. I have no idea. That's 10% of the assets. Number two, no idea what this is. 9.7% of the assets. I'm not even going to try to pronounce this name right here. But then you go down here, we got a lot more US companies. A couple big ones, guys. Microsoft. Constellation Software is in Canada. Now, Constellation Software is very well known, and here's why. Mark Leonard, look at this guy. Does this look like the kind of guy who's the CEO of a company? This guy is one of the best capital allocators that ever existed. This guy is awesome. He has done a great job of buying back shares at low prices and driving up the stock and driving up the earnings per share of his company. He makes a lot. It's a software business. They make a lot of small acquisitions and put them all together. He is brilliant, but he looks like this. So he would probably been laughed out of every presentation on Wall Street. He sticks to what he knows. He does it well. So that's Constellation Software. And again, that's not as big. These two, Microsoft and Constellation, only 3.3%. Let's see, who else? Amazon, AutoNation. AutoNation's a big company owned by some super investors like Bill Gates. PayPal. Yours truly has some PayPal. And eBay. Guys, I bought eBay, and then my viewpoint of investing changed, and I didn't look at it as a compounder for a long period of time. But here's the interesting part about Mohnish's belief in this fund. He's trying to find companies with a long runway. What do I mean by long runway? They have a lot more growth potential in there. That's why I bailed on eBay. But I'm not going to lie. I respect Mohnish a lot. I'm starting to reevaluate eBay, saying maybe I'm missing something on eBay for their growth potential in the future. I didn't think it was a company that could compound forever, but maybe it can, especially if they're buying back great shares. Because remember, we've talked about how we talked about in the past, that book by Chris Mayer about 100 baggers. I think it was called 100 to 1. The way to get a company that goes from 1 to 100 and you 100 times your money is you got to find them smaller, where they have that long runway of growth, and they can buy back shares at cheap prices when it makes sense. And that's what's important here, okay? So what he's hoping for is these companies to do two things. One, grow. And two, if they grow, but the market still doesn't see how valuable they are, buy back your shares and increase your earnings per share, buying back cheap shares. That's the important part. Not gonna lie though, I don't necessarily agree with Microsoft. Oh, he's got Spirit Airlines in here. That's interesting. Again, the ticker is WAGNX. Now, we've been very critical of actively managed mutual funds. If you watch our channel, you know this. If you're new to the channel, hear me out here. Buying a low-cost ETF will make you 9 or 10%, and you'll pay minuscule fees. This fund, the fees are 1.25% per year. Versus the S&P 5, SPY or VOO is around 0.09% per year. That's a huge difference. Does that mean you should ignore Mohnish? Not necessarily. But you need to get a really good return over long periods of time to justify giving him this kind of money, giving him this kind of fee. That's important to understand here, okay? And the other thing is, Mohnish is the kind of guy, he's a value investor. He was personal friends with Charlie Munger. He knew Warren Buffett. He and Guy Spear bought the lunch with Warren Buffett, and they became friends. That's the key here, that he's got a great track record. From like 2000 to 2015, he compounded at well over 20% returns per year. He wrote a couple great books. We loved talking to him. In fact, he gave us one of the best compliments ever. Two things. When we first reached out to him to interview, they finally responded and said, yeah, we'd love to have an interview. And I asked him in face-to-face, like, why'd you agree to an interview? He said, we watched your videos and we realized you guys weren't some just stupid YouTube channel. We realized you guys understood value investing, which was a great compliment. And the second thing he said was, we're doing God's work. And I didn't really take it as we're doing God's work. But what he said was, people need to hear this. People need to hear this idea of value investing. People need to understand that when you buy a stock, you're buying a piece of a business and you're buying a future cash flow. And that's what Mohnish is doing here. I don't know I only know like 5 of these companies in terms of having a reasonable conversation about them. But Mohnish, he's really a big believer in he can sit there and wait and absolutely wait and absolutely wait. Now, the question is, how long can you wait? There's no magic bullet here. Just because you invest in this Wagons fund doesn't mean every single year you're going to start making 20%. What happens usually with great investors is they look terrible when things are going high, but when things are falling, they're accumulating great companies at great prices. And when the next bull market comes around, which will always happen, they will skyrocket. So you've got to be patient whenever you invest in a guy. And along the way, you're paying that 1.25%. Just remember that. It's very rare for me to say I'm okay with that. I'm not endorsing this fund by any means. But if you want to put a little bit of money into a guy that has a great track record, it could be Mohnish. But do your due diligence on Mohnish. We love him. We think he's a smart guy. We had great conversation with him. I think he's a good investor. And this fund is small right now. I think they only have $10 million in assets under management. If you remember ARK Invest with ARK ETF with Cathie Wood, the vast majority of the people who've invested have lost a ton of money. Why? Because the majority of the money came into the fund like at this point, and now it's down here. So all these people have lost a ton of money. That's what tends to happen. Money flows into funds after the performance is taken off. Peter Lynch, one of the best investors ever, he always said, the average person who invested in my funds actually didn't do very well, didn't even beat the market, even though his funds made 20% a year. Why? Because they only invested after his performance showed through. When we look at the best performing mutual funds over a 10-year period, at some point in those 10-year periods, those mutual funds tend to be in the bottom 10% performance. What happens then? People will bail. People will sit there and say, I'm out. And that's a big reason why you're watching this video. You want to make more money. And a big part of that in making more money is investing with confidence that takes the right process and the ability to handle your emotions. That's what I'm talking about here. Handling your emotions to believe in a process that works. Everyone in the history of the world, including Warren Buffett, including Mohnish Pabrai, has made the wrong financial decisions because of emotion, especially at some point in their life. But the great ones, like Mohnish, are the ones that handle their emotions well. He started investing at the peak of the dot-com bubble and made 20+% returns. That's incredible. And we can all relate to seeing a stock fly high like NVIDIA, like AMD, or drop fast and worry we're either missing out, we have FOMO about those, or that our stock is going to zero. We've all been there. And the right emotions coupled with the right process can greatly decrease your fears. Now, when it comes to a company like this, a fund like this, you've got to believe in the process, so you got to manage your emotions. If you believe in the process, you've got to sit there and say, I'm going to hold on and put enough money in there where it matters, but not enough where it makes too big of a difference. Let Mohnish focus on the truth behind these numbers and make better and more profitable decisions. But for you, it's more important for you to understand the right process. And the best thing that happened to me was investing millions of dollars to create this community in software and realizing that I'm not the best investor in this community. There's actually somebody in this community that I hired, Dalton, who I think is a much better investor than Mohnish. That's what's incredible. So now I'm able to bounce these ideas, talk about funds like this, and we have each other to keep our emotions in check when doubt starts to creep in. Or, like the other day with eBay, I went in the community and said, guys, I'm rethinking eBay because of Mohnish. What are your views on it? And I got a litany of responses. So I use the software every single day. Our staff uses the software every day. We engage in the community every single day to talk about these companies, to talk about this, everything like that. And every successful person you know has been one great connection away from changing their life. Mohnish paid a boatload of money to meet Warren Buffett and Charlie Munger, and that changed his life. So if you're interested, click the link below, join our community to get 7 days of access for $7 to test it out and see how it can change the way in which you invest and make money. So I'll see you in the community. Let's talk about this company, this fund in the community, because it's a great potential. I'm not endorsing it. There's been no endorsements whatsoever. I get nothing from this. I just believe in Mohnish, and I believe when I look at these, the only one I'm actually surprised about, the funny thing is Microsoft. Amazon too. I don't think the valuation, but I've been wrong on Amazon for so long, guys. Like, I just don't understand how their growth, their numbers lead to the growth. Like, you know, you hear about Amazon, you hear about people talking about it. It's like, Paul, you don't get this, you don't get that. I'm like, I know I don't. Because I look at their gross margin, I look at their profit margin, I focus on free cash flow, and I'm like, man, and that's why I avoid it completely. And we had a great interview with Mohnish. At one point, he talked about Microsoft being in the too hard pile. And I said, well, that's not the too hard pile. I said, if it was $30 a share, would you buy it? He goes, yeah, absolutely. I'm like, so it's not too hard. My viewpoint is there's 3 piles. There's yes, there's no, and there's too hard. But too hard to me means I don't understand if it's worth $1 or $1,000. I have no clue because I can't value it. That's the too hard pile for me. But for me, yes means I'm buying it. No means either I don't like something having to do with the company or the valuation doesn't make sense. So guys, if you want to see the 13 stocks that are currently in my portfolio that I can discuss, click this next video. And don't forget, click the link below to join the community. Take care.